Joining me to discuss the busy week that was and to look ahead for Wall Street is Saratoga CEO Chris Oberbeck. And Chris, it is great to have you on the program. Thank you so much for joining us.
Thank you.
And you've had a great year. You got an increase in assets under management. You said you had your best year ever?
Best quarter ever.
Best quarter ever. Congrats to you on that. What drove that?
It was just a combination of things, good credit performance. We had some equity gains in our portfolio and a lot of originations, and we were able to raise a lot of equity in the stock market. So everything's in a good, healthy position, and we're well positioned with, we can grow our assets by another 50% based on the capital we have in hand.
And Chris, we got a couple of items that are obviously going to be important to that and to investors this week and looking into next week. Brexit is one where Boris Johnson thinks he's got a great deal. Is this going to change things in terms of market performance next week, you think?
Well, if it goes through, I think it might, because there's obviously been a lot of turmoil. There's a lot of momentum in the status quo over there. But if you can get a resolution here and people can get back to work and start moving to the next reality, I think that'll be a good signal for the world. Maybe it'll impact some of the trade deals that are held up, and if everybody decides let's settle up and move on, I think it could be very positive. But as a business person, I think it would get done. As politics, we don't know. Yeah,
and then there's China, and then there's USMCA, and of course we've got a Federal Reserve meeting in about 2 weeks. Are you expecting the Fed to cut rates? What's the impact there?
Well, I think the Fed has a difficult decision because there's no inflation, so there's no real reason to worry about inflation and raising rates. There's been a manufacturing contraction. We now have our third month in a row of manufacturing contraction. Railroad traffic is down, so a lot of signals there. Just this month, consumer sentiments, consumer spending's down a little bit. A lot of that's auto, which is the big ticket consumer item. So we still have a lot of momentum in the economy, but there's a lot of straws in the wind, if you will.
Yeah.
And so
a lot of uncertainty that causes managers to sit on cash.
Exactly, and so, the old adage, an ounce of prevention is worth a pound of cure. So maybe a cut at this time might preempt what could be bigger problems down the road.
Do you think a China deal, the one that we've heard about in the last week, that it is going to stick, that they will sign it, and what's the impact there? I mean, nobody really knows, but the president said that he is expecting Xi Jinping and himself to sign a deal at APEC, which is just in about a month.
Well, it's like the broader context of the deal, right, is if you're China, you're saying, am I going to wait out this until the next election and see if I get someone other than Donald Trump to negotiate with and maybe get a better deal? How much pain am I going to get between now and then? Or does it make sense to just make a deal? Because we're going to have to make a deal. I think the whole world is pretty much lined up that China needs to adjust its relationship with everyone. And hopefully, they come to terms with that, because China's got a tremendous economy, and if they reach a regular way deal, they still can be successul down the road.
But I think you make a good point, because it's how much pain can you take? This week we got news from China that the GDP came in up 6%, they told us, but it was weaker than expected. So as the Chinese economy slows, does that hit the U.S. economy as well?
Well, the U.S. economy has the benefit of being largely consumer. As long as the consumer is employed and confident, we can kind of ride a little better. Maybe they're more of an export-driven economy. So, they're trying to be more consumer, but they're very export-driven. So I think there's a lot of pain there, but they can take pain better than we can, and they don't have an election coming up.
So you've got, what, about $1 billion in assets under management. You've got to allocate that. How do you allocate capital in this environment where you do have all these uncertainties?
Well, our focus is primarily on credit, and most of our assets are in senior secured credit, and so we're focusing on secular growing businesses, mostly in the United States. The United States economy is good, and there's a lot of innovation going on. There's a lot of growth companies. We focus on a lot of smaller middle market companies, and even if we had a recession, they would still be growing. There's lots of improvements. And
where is the growth, Chris? What would you say are sort of the growth areas of this economy right now in terms of where you're allocating capital?
Well, let's take education. There's a tremendous amount of improvement in the software underpinnings of education. In terms of using the computer, using email, using package solutions to curriculums in schools. Mm-hmm. That's rolling out. Colleges are seeking to get a broader use of the intellectual property they've developed, and a lot of their alumni are coming back to school, taking correspondence courses and things like that.
And you're finding companies that are doing that?
Oh, yeah, and they're growing tremendously, and it's a great revenue opportunity for the universities.
Chris, it's great to have you on the show. Thanks so much.
Thank you.
Chris Oberbeck joining us. Don't go anywhere. My exclusive interview with media legend Barry Diller is up next. Stay with us.